front of you is Lofty-corban Investments. My name is Leonida Musioka. My colleague is David Gitao. He'll be introducing himself as he talks for sensitivity on time. And we go straight to our presentation. So Lofty-corban Investments is a fund management institution. We are a fund management institution licensed by Capital Markets Authority, Retirement Benefits Authority, and ISIFA. We are located in Nairobi, CBD, Kimathi Street, IPS building, first floor. Going straight to before we go to our licenses, we go to our mission. Our mission is to prudently empower our clients to achieve financial freedom. So we are here to hold your hand and guide you towards financial freedom. And how do we do that? We work within our licenses. First, we are regulated by Capital Markets Authority, because you realize you have to get the CMA license, then only you can apply for the other two. The others will not license you if CMA has first not licensed you as a fund manager. So if you are a fund manager, then you go apply for your license with RBA and ISIFA, right? So under fund management, we are licensed to trade with the products of the capital markets. And the key to this team is the money markets. We understand that best as SACCOs. So our key product in CMA is money market. Then we go to our RBA license under the Retirement Benefits Authority. As the name states, that is to deal with retirement benefits. And we do this all through the retirement journey. Basically, what we should know is that the day you get your ID card, that is when your retirement journey begins. So from that point, we are ready to take up, to hold your hand, take the responsibility, guide you through the journey. The earlier stage is the contribution stage, where you contribute into that kitty, sometimes by yourself, depending on your mode of employment, other times with the assistance of your employer or a partner in whatever way, so that you contribute into your retirement kitty. We call that contribution stage. Then we come to the point where now you start thinking, or you find yourself having to discuss retirement, either voluntarily, by circumstances, or by whichever other means. This is the point we come in for advisory. We know there are repercussions around your pension. If you choose early retirement, taxation will be higher. Actual retirement, it will be a little easy. Late retirement, actually you're encouraged now to take your package and go home. The government restrains this through taxation, because the government is looking at you having a sustainable life when you cannot be employed. So here we come in as advisors, so that you don't lose too much to taxation, or take money when you really can work for more and do not need your retirement reserve. Then there is actual retirement, which is welcome by the law and any other aspect, and where actually your employer will now have that discussion openly with you. So what do you do at that point? What are the options available? And then there are also options for late retirement. So this being a team of teachers, we know we are used to what we call pension, that monthly income, right? That can be done in two ways. You can either have an annuity or an income drawdown. Income drawdown is it's a new idea in the market. We are used to the annuity, where kila mwezi unaenda unapata umekewa pension yako. We call it pension. Now that is your monthly stipend to sustain your life. You are used to a salary, so this comes to cover for that gap. So we are there to give you a post-retirement product. In Lofty-corban, we have the income drawdown, and this goes case by case depending on many parameters. So if we have to handle it, then it is at personal level. But yes, we have that post-retirement product and post-retirement advice. Then we go to our third license, ISIFA, Institute of Chartered Investments and securities analysts. So this is an institution that licenses us to do financial analysis. That is, we have analysts, we have certified. Actually, David with me here is a charter holder who can do financial analysis for a client as an individual, for an institution, at whatever level. David can be able to do that, and he holds a charter to that. And now as an institution, we can do financial training, like what we are doing here. Can go train the public, like we are authorized, we are licensed to go train the public on finances. Moving on, still on Lofty-corban, in matters governance. We've done a lot of governance here. We've gone through the classes and all that. Just to know who is Lofty-corban, who are these people, who is behind this name. We have our chairman, Mr. George Wafula. George Wafula is a senior financial consultant in the company. In relation to the Sacco movement, he's the treasurer, Maisha Bora Sacco, and he's also the chairman, Maisha Bora Investments. We have another senior board member, Professor Elizabeth Kalunda. In the SACCOs, mostly I know the CEOs here can identify. She's the vice chair, ISPAC Kenya. You know ISPAC, the institution for accountants. She's the vice chair in the country. She's also the acting DVC Finance and Planning, USIU. Yeah, so she's our senior board member. Our other senior board member is Peter Coril. Those from Rift Valley, you can clearly identify, is the CEO Nyayo Tizons. Then we have Richard Tobiko, sisi wote tunamjua. He is the acting CEO Nation Media Group. So those are the faces behind governance of Lofty-corban. Then we go to the hands-on team, the people that are really doing the job, the people you'll find in the office every day, the people you can call for all your assistance. We have Stanley Mutuku. Stanley Mutuku, I know we have known the name before. He started with the Old Mutual, Jubilee Insurance, then went to CIC Asset Management. He's the former immediate MD, the former MD, CIC Asset Management. And in Lofty-corban, he is our CEO. We have Mr. David Gitao. Let me skip because he is here. He'll have to do his own introduction. We have Alex Mudaka, our Chief Investment Officer. He's also a member of ISIFA. Worked in Britam, worked in Genghis Capital, CIC Asset Management, and now here with us at Lofty. That's myself, the very first one. So like I said, I am Leonida Musioka. And before any other introduction, I am a member of All in Sacco, a strong member. Member number 17048. And I'm happy to be there. I'm still happy. And so far so good. When requested, I even give referrals to that effect. I'm sure somebody can bear me witness. Nicholas Mwachilumo is our finance manager. Also worked in different capacities. We have Wangeshi Mwangi, who is our marketing manager. So when you see our publication, all that data we have out there in the public for traction and all that, it's Miss Wangeshi Mwangi who does that. We have Seth Andiki, who is a senior manager, technical and pricing, performance. We also have Cecilia Makali in charge of administration. Teddy Yanga, senior investment manager, working with Alex Mudaka that you saw on the previous photo. Then we have Wamboi Njogu, operations and project management. And at that point, after introduction of the company, now I give it to Mr. David Gitao.
Thank you, Leonida. Good morning, leaders. So those are the behind, that's the people who are behind whatever I want to propose to you today. At Lofty-corban, we are on a mission to empower Kenyans towards achieving financial freedom. And our proposal is that we want to partner with the association, we want to partner with your individual SACCOs, because we have discovered that that is where the biggest gap lies. We want to teach and empower Kenyans on how to make money while they sleep. Warren Buffett keeps telling us, if you can't find a way to make money while you sleep, you will work until you die. And we know that we have members, even after retirement, people go into depression, other sicknesses, just because of the issue of money. We want to tell them that doing well financially does not mean that they have to be extremely educated. It is all in the head, it is all about discipline, it is all about consistency. And one of the things we want to partner in, and it's not just empowerment of members, it's also empowerment of staff and any other empowerment of even the members of the board and even any other organization that is affiliated to the Sacco and any other associations even amongst the members, whether it is their chamas or whatever it is. But one of the things I like telling the youngsters, particularly when they meet them, and that is why I believe empowerment should begin at the point at which people start getting employed, is that I usually ask a question, which is your dream car? People answer, oh, you know, BMWs, do you want Mercedes? Then I keep asking them, what do you think when you see that dream car on the road? Oh, the comfort, mwingine ni road show. I try to tell them that nobody has actually talked about the driver. So when they want to go and show off and buy a new car with the windows closed or rather open, akiweka mkono hapa na gari kwa hivi steering, hakuna mtu anamuona. When you see your dream car, you imagine yourself in that car. So when you buy a car to go and show off, nobody is seeing you. They're imagining themselves in that car. What I'm trying to tell these youngsters is that the fastest way to go broke is to show other people that you have money. One of the things we want to also empower them on is that they don't need to be great to start. They just need to start to be great. It doesn't matter how much money you have. It's not about how much money you make, but rather how much money you get to keep. So we want to show them strategies on how they can actually start with as little as 100 Kenyan shillings. And most importantly, empowerment on things, on matters risk and return. A lot of people will say, or other people say, high risk, high return. Sindio? Hiyo ni ukweli? Is that true? By a show of hands, high risk, high return. By a show of hands, who believes in that mantra? High risk, high return. Anyone with their hand up? Wrong. High risk is not high return. High risk, high potential return, because the potential for losses is equally as high. Risk drives return. And I want to empower people on how to look for the red flags, because you must manage risk first before you start looking at the return that risk derives. A lot of people will go for return first without understanding the background that created that return in the first place. We all have dreams, our members all have dreams, and the biggest risk that our members face, that we face as humans, is the risk that we do not achieve our dreams. Then we live miserable lives. And that is the thing that we want to empower them on how they can achieve these dreams, whether it is saving for an emergency, whether it is education, whether it is to build their dream house, whether it is even to go on holiday. Basically achieve those things bila stress. For your businesses and for your members' businesses, understanding how can the business increase its revenue through investment income. How, if your income or your revenue is fluctuating so much, how can you use investments to reduce the volatility of that revenue? Issues to do with emergency reserves we had yesterday. That ni lazima, as a company, as a Sacco, as a person, you must have something for a rainy day. Ecclesiastes 11:2 says, invest in 7 ventures. Yes, 8, because you do not know what will befall you. So it is not me saying that you should have an emergency fund, that you should have a reserve fund. Biblia ndio inasema. Companies also, accumulation of dividends. There are ways you can do that through investments, even how you can operate and optimize your cash flows. In terms of bringing it down, we also talk about even the Sacco requirements, because even the Sacco has dreams of its own. Issues to do about dividends, how you can accumulate dividends somehow in some investment account over time, and at the end of the period, you can even, depending on the amount of interest that has been earned, pay even higher dividends. When you have excess money, maybe because the loan demand has gone down, when that loan demand goes up, that money should not be idle. Money never sleeps. That's one of the rules of money. It should always be working. But how do you access that money very fast, meaning liquidity, with no loss of value? Thirdly, of course, there is the issue of managing reserves. And one of the things that we want to tell people about is that by the time they're through with our sessions, they understand how to invest, both directly and through what we call collective investment schemes. So that's one of the avenues that we use to empower. And we usually empower on investing for capital preservation, where you don't want to lose a single coin, financial planning. The third series is investing for income, that is rent and bonds, and then investing for growth, where you want to double, you want to triple your money over time. But just briefly, in terms of collective investment schemes, the oldest scheme in the world celebrated its 100th birthday last year, around August. In Kenya, this collective investment scheme started in the year 2000. Very popular. Right now, we have about, as at September, there was about 300 billion Kenya shillings worth of investments in those collective investment schemes. 1.2 million investors, both companies and corporates. We have 52 collective investment schemes. South Africa began way before us. As we're talking about 300 billion Kenya shillings. Alafu tunasema tunajivunia kuwa Mkenya. In South Africa, they are way ahead. In those collective investment schemes, those money market funds, they have the equivalent of 21 trillion Kenya shillings. In the world, these collective investment schemes have about 64 trillion US dollars. The Sacco movement is the biggest investor in the collective investment schemes, approximately 28 B in those schemes as at September. So about 9-10% of that belongs to the Sacco movement. And why are these collective investment schemes so popular? It is mainly because of the structure, because people are concerned with one thing, safety of their funds. Sindio? And how do you guarantee safety of your funds? It is because of the structure. Now in Kenya, the structure of a collective scheme can take the form of a company, a partnership, or a trust, but we have gone with the issue of trusts. So it is a trust, and of course, the regulator is the one who gives a license to this trust, but the boss of the trust is the trustee. They're the ones who have ultimate liability in case anything goes wrong with this trust. Then of course you have the custodian who is supposed to collect and pay out any money and keep all the documents of title. Then you have the investment manager who is supposed to guide the trustee on what investments to make so that investors can get high return at the least risk. And because there is money in this scheme, it must be audited. And of course, finally, you have the investor. So just to give you an example, this structure is standard for any scheme. And it is standard in the sense that from the onset, you must have those in place. And there's that continual obligation to have those structures in place. So as an example, we have Lofty-corban Investments Limited, the trustee, KCB, custodian, Equity Bank, investment manager, Lofty-corban Investments Limited, and of course there's an auditor. But one thing that most people don't understand, kuna gari na tulipokupatia license ya kuendesha hii gari, mbona uendeshi hii gari? Kumbe, they've discovered that gathering people into a collective investment scheme is also not easy work. The first thing that we usually start off with is capital preservation. And basically with capital preservation, you're saying you don't want to lose a single coin. The shilling you put there, tomorrow you should find that shilling. The three investments that achieve the objective of capital preservation: deposits, Sacco, bank, treasury bills, commercial paper. Those three investments called or form an asset class called the money markets. So you can go directly, that's what we're going to tell your people. You can also go through a collective investment scheme. And the collective investment scheme, whose objective is capital preservation, meaning you don't lose any money, meaning it invests in deposits, treasury bills, and commercial paper, meaning it invests in the money markets, is basically a money market fund. And how does it work? Unafungua account na trust, weka pesa, you earn interest on a daily basis, interest is credited at the end of the period. And just to wind up, in terms of our portfolio, we are now at approximately 3.4 billion as at yesterday. Na hatujafikisha even 2 years in operation. We have approximately 8,379 clients. In terms of return, the day before yesterday it was 14.05% per annum daily yield. We have also something called a fixed rate fund, which is at 9.5% per annum. The reason for the difference is the banks are now taking rates at they're giving very low rates, so the fixed rate fund is quite low. I know it is not clear here, but one of the questions that was asked yesterday, and I may have heard badly. Here you have money markets, the highest at about 15%. Sisi tuko 14. In the same market, there are people who are at 9. What is the difference? And yet we're investing in the same investments. T-bills, commercial paper, and deposits. When we started, there were 5 other funds that were started about the same time. For us, we were very lucky that we came in at a time, in fact, all these 5 funds came at a time when interest rates were going up. So our first investments were at a high rate, and they continued at a high rate. That is why we were at the top for a very long time. It usually takes other fund managers to catch up about a year. 1 year has passed. People have not caught up even with the new funds. So there are some at 9, there are some at 14. So now it is all, how do you explain such kind of disparity in return? It is strategy. It is all about strategy. When I was managing the money market fund at CIC Asset Management, we used to get a lot of pressure from the relationship officers. Muna complain that the rate is not high. So I used to pressure the analysis team. I need insights that other managers do not have, because I should be able to beat them in terms of the rate. Remember, we're investing in the same things. So right now, it's simply about strategy. There are people who are working hard. There are people who are just asleep. There are even those who are not even trying. I can tell you for a fact. And I have also tasked our team as I'm no longer in full-time investment management. Nowadays, I'm more into training and financial advisory, but I'm the chairman of our investment committee. And one of the things I've tasked those guys to do is to ensure that we are always ahead of the market in terms of our research capabilities, in terms of the insights, and our forecasting skills. Because investments are about the forecasting. If I can forecast that CBK is going to take a certain action before another guy makes that forecast, and I decide interests are going to go down, so I'm going to invest in long-term treasury bills to lock a good rate. That is why my rate is above that. So I must have seen something that the other managers had not seen. So why Lofty-corban? Last slide. One of the things is that I believe in partnerships. Okay? And it's not just about empowering our members, empowering our staff. It goes even beyond that to the individual SACCOs themselves. One of the things that we can always be doing is have forums, even online, depending on the needs. We have our own forums every 3 months where we tell investors what we believe is going to happen over the next 3 months, over the next 6 months, or even 1 year, and how that is going to affect the investments so that they can start taking action early. So one of the things we can do through the association is to partner with you guys. Every 3 months we just have a forum. We exchange ideas. Even individually as SACCOs, if you have any concern regarding any form of investment, you can come to us and ask us for our opinion. Remember, everybody in our organization is in some SACCO or another. It is in our best interest that the SACCO movement continues to remain strong. I know you have forums, WhatsApp groups, where you ask about opinions. So ukisikia kitu mbaya labda umekuja Lofty-corban tukakwambia hiyo chunga, I know that information will be relayed in that group. And that's what we want to do. So we have that personalized service. We also have partnerships where, and we've done this with a couple of SACCOs, depending on what is happening in the financial markets. Because at the end of the day, the SACCO has to lend. Now, depending on the kind of products you have, we can collaborate and create products that can increase loan demand to invest in some of these investment products. The last 2 years when the markets had gone haywire, we have many members who are actually borrowing from their SACCO at 12 to come and put money in a fixed rate fund for a year, then at 17%. So no mtu anatengeneza 5%. But now that has reversed. One of the things we try to do is to give you objective advice, even if we have nothing or you move away and go to another fund manager. That's not a problem. We always try to give high interest rates. Our withdrawal procedure from our money market funds is same day. What we have done with the corporates and the retail is that because corporates, the number of corporates are a bit fewer, so we usually send that to the custodian first. That is executed, then we send one for the retailers. But generally people get their money on the same day. I think I've talked about empowerment. We have now, since we started, about 12 SACCOs in our books: USIU, Eagle's Eye, Afrimark SACCO, Parliamentarians, it's our biggest, and quite a number of other corporates. So my appeal is this, is that we will be reaching out to the CEOs to set up a meeting. So don't be surprised if your leader calls you either next week or the week after, to try and set up a meeting so we can meet with you, understand how can we partner, how can we reach our staff, how can we reach our members. And it's not because you don't know these things. Unajua ukileta mtu mpya kuongelesha, people tend to listen. Just like me, I cannot give financial literacy to my family members. Ati my aunt atasema sasa wewe nilikuona ukiwa hivi, mimi ndio nilikusomesha, sasa unaniambia nini? Bring an outsider, bring me, bring your leader, bring that lady called Wangeshi who we have left in the office. You have our numbers, you can also get them from Ivy. And finally, we want to tell Kenyans about the rules of money. And one of the biggest rules of money that I want to go out there and tell Kenyans is basically what we call the language of money. Money only understands one language. To go a bit tribal, money belongs to only one tribe, and it speaks only one language. And the language is, save me today, and I will save you tomorrow. Ladies and gentlemen, thank you very much.